Hey, it's Mack with PriceActionTradingSystem.com, and it's Thursday. It's October the 17th. I guess the market liked the fact that the government's reopened, and you can see the reaction. That's the only thing I can see that would take it up like this. So it's been an interesting trading day. Um, we don't get many trends like this, and you can see this. It's really strong. Um, There's a couple different ways to see this in here. There's couple of shorter term moves in here. So you might have had them too, but in the end, it took a little, for whatever reason, I originally had this a little flatter, and then I noticed it was going steeper. So I played with it a little bit and ended up coming up with a very good channel right here. And I know many of you saw this channel because I saw your chart and you saw it. Where I think a lot of people got mixed up. I saw more than one chart this morning that, people got mixed up on this right here. Some of them were coming off, at least one trader started their trend like this, and so they looked at that as a break and two legs down, then they started going long, which, I could see you looking at that, but I always tell people we usually don't pay too much attention to the previous day's price action. There's always enough reason in the current day's price action to figure out what's going on. And even if you use yesterday, I'll show you this. If you draw it right, if you use the closes, it would have been more like that, and you still might have seen the thing. But generally, even if you use the first few swings and even use this one, then you get an even better setup across here. For staying with these shorts all the way down to here until you get the break right here. So what I always try to tell people that they have to understand is you want the price action to fit. You can see how either this channel or my bigger channel here both fit. They're holding prices fairly well, and we got a little overshoot here and an overshoot here, and then we had the two legs down. We didn't quite make a new low, but we made a double bottom, so you might have even seen this trading range here. Some different things that you might have seen there, but at least there's one gentleman that kept saying that he drew his trend channel like that, right, something like this right here, and in his line, and you do get kind of a short-term channel right there. I see that on that correction right there. But that's not what he was looking at. Let me see if I can find his chart again, because now I'm really curious as to what he was saying. I'm going to pause this real quick. Okay, here's the other trader's chart, and you can see they got this channel really well right here. They don't have the median line, but you don't have to have that. It helps. But and you can see they were close on this shorter term, but your main channel is here. And if you draw that right down through there, it's real obvious. You get the break, two legs down. We didn't quite get a new low, and then it reversed out of there. Again, compare that to my chart. You can see what and that put them into a short right there. It would have been, yeah, right here on my chart. And you can see that that's not a very good short really, but look at all that overlap right there. And I'm going to talk about that too real quick before we get to the trades, because people get so confused and hung up on that, and it's difficult to read this kind of stuff. But you can see the difference. You can see the short it put them into right there. And their channel just doesn't fit, even on the short term when they don't quite have it right. You see, if you draw the short term one right here, it would have been much steeper like so, and that puts this way outside of that still. So but this is just a correction in a bigger trend after a trend line break. So I hope that makes sense. You want your price action to fit neatly, and their chart just doesn't. You can see their chart here just doesn't. The price action, they got it touching the high here, and they got it to touch here, but it's wrong, and they didn't get it to touch anything but the lows down here. You can see if you drew it right down through, even if you drew the shorter term one it would have come right down through there, and then you copy that and bring it over, and it would have come right down through there, and you would have been touching on both sides of those lines all the way down. So it's not so much, we found out yesterday, if you watched yesterday's video, it's not so much where you start from, because you could start from different places and still get the same results. It's what your channel, look how this is holding prices real neatly here on both sides. There's no doubt he's got that one right. And there's no doubt that that doesn't look exactly like mine here. And we finally got a break here. We overshot it first, and now we've overshot it to the low side. And this is kind of a spike in channel. And somebody asked me about a spike in channel. But notice how steep that trend is, that original trend that came off those lows. Look how steep that is. That's not a 45-degree angle. Most healthy trends kind of fall over to a 45-degree angle, and you can see that right there. And so this is what happens. The market is too strong here, but even though there's still a strong trend day, it kind of flattens out a little bit and gets more of a 45-degree angle and continues to trend. So this is a spike in channel. Prices spiked up and then went to a channel. And hopefully you can see that there. They spiked up and then flattened out a little more and went into a channel. And you'll see that that's not an uncommon it's not an uncommon pattern at all. So that's what a spike in channel is for the person that asked me about that as well. And then I think there's one other thing. I'm going to pause this again for a second. Okay, there's one other thing. Somebody mentioned to me that they figured out they kept having a problem. They couldn't get their tick chart to match mine, and they reminded me of something that I haven't really thought about. Is there's a setting in NinjaTrader where you can filter your ticks, and I think a lot of times they recommend that you have that set. So go to your tools, options, and look under data and make sure you're not filtering your ticks. Just leave that blank. And after they unchecked that and saved it, then they said their data looks almost exactly like mine. So double check that you don't have you're not filtering your data, and that'll probably help as well. So. And I think that was all the things I wanted to talk about before getting into the chart lesson. Okay, I'm back. I apologize. I was gone a little longer than I planned to be. This trade set up here, and I tried to catch this trade with a limit order, and I couldn't do it, and I'm not going to chase it. It's too late in the day. But yeah, would have worked there if I could have. Shoot, that was a nice setup. Notice that we had this little channel coming down. We had the break, the new low, a second attempt to go lower. It failed, then it turned up. I didn't really like this bar here, so I dropped a limit order there, but it didn't get filled. It shot off too quick. And so anyway, let's finish the chart lesson. We'll watch that and see what happens. But I'm guessing we're probably going to try to test this high if we can. We got to get past here first, but that would have been an easy, even if I'd entered with a stop order. Enter with a stop. No, you need one more tick from there, but I didn't like that bar, so I tried to get long right there, even with that top of that bar, and just couldn't get filled. It went off too quick. So, but anyway, maybe some of you are taking that trade right now and liking it. Maybe making some money there. So, but let's talk about the trades. Hopefully, all the other things that we've already talked about made sense. This trade right here, you know, you got this down sloping channel. It fits pretty good here. We kind of overshot it here, so you might have seen it more like this channel, this tighter channel, and that's the way I was really playing it. That's the first break. So, and notice this resistance here. There's a little double top right in this area, and we couldn't get past it again right there. So you got to be real leery about going long right there, even though there's a failed second entry short, because now you've got several, let me get this out of the way. You got several, 1, 2, 3 overlapping bars by the time that triggers. You know, you've already had 2 legs up. You're not really looking for a reversal yet. You know, what I told this trader is anytime you get ready to take a trade, before you take that trade, ask yourself, if you could move the market, if you had the buying power to move the markets, what would you do here? And if you saw those little matching highs and then this one right here and this turn down, you know there's a lot of stops there. Um, so what they were really trying to do was run up here and catch those stops and trap all the longs in and all the shorts out, and then look what happens. They take it right back down. So that's what was really happening there. But ask yourself that question. Um, just looking to see what that trade was doing over there. Ask yourself that question that, if you're about to take a trade, always ask yourself, because that's the whole idea of the market movers, the people that can actually move the markets, that do most of the buying and selling. What they're doing is they're trying to trick you into entering in the wrong direction at the wrong time. And one of the worst things you can do is buying highs and selling lows. Look what happens if you sell down here or you buy up here. And look what would happen if you bought up here when it came back up here again. It pulls back. So it always gives you a better chance to enter if it's going to be not like right here. This is no doubt that's congestion. Look what happens. It fails out the top side, probably trapped another bunch of longs right there, and then it runs down here and it runs all their stops and it traps in a bunch of shorts, and then it reverses and then goes where you think it's. So they're always trying to trick you. So you just remind yourself, it's never smart going long at the highs of what kind of looked like a possible trading range, as well as this right here. Now you've got this trend going up, and this would have been the first bar that you might have considered going long above, but notice it never broke. Notice that's the first good looking setup bar that came off that possible trend line running up through there. You didn't have this one in place yet, and that's the first one. But notice prices never, so that would have been your signal bar, and prices never broke above that, and so you never got a chance to go long there, even if you wanted to. Now this one was a little different. Prices pulled back. The reason the trader liked this was the trap. But if you're drawing your trend and your channels, you know that that's two legs up, and that's the first break of this little channel. And if you saw it this way, it's still the first break. So you still get to the same place. And then look, there's two measured legs down. Didn't quite get a new low, but it looked kind of like a trading range, and there was too much. And you can see that's a perfect measured move down. And I'm guessing, I never measured it, but you can just eyeball it and see that it's probably, if it's not a perfect measured move up, it's real close. And there it is. You got that one tick trap. You'd already met your target there, and then they trapped everybody and turned it around. So anyway, hope that's clear to you, why you got to be careful going long at highs like this. And see, even here, you didn't want to go long at the high. You wanted to wait till it backed up a little bit and then get in. And if it goes higher here, you just got to miss that trade. Just kind of like right here. This is kind of, you got one leg up, a pull back, and there's a second entry long there. There's a little bit of a trap, but it's not a good place to be going long because you don't have any. You might have had this trend line in place if you drew it across these highs. You could have done that and drug it down, but you're still not sure because it's not confirmed really. And so you don't want to go long there, even though that's a good trade and would have worked. It's just risky. And I started to draw that in green because there is a trap there and all. And just like this one, I drew this one in green, and I really struggled to draw that one in green, but there's a perfect double bottom. Look at that reversal bar there. There's plenty of room to get out before you get back up in here to the EMA. So I struggled with whether or not to make that one green or not, but I like the setup, so I felt like, hey, I better mark it. And going short here, so let's go back to the short here. You got your first entry. This was a second entry short, and so you could have gotten in short and then maybe almost gotten trapped out. But that's why I like to use two ticks, because if it goes more than a tick, two ticks above the signal bar, which this would have been your signal bar on the second entry, then it's generally it's generally going to go higher. But generally what happens on these traps, it'll go one tick higher, just like that. So I like to use two ticks. So if you followed the rules and kept your stop up here a couple of ticks, if you only kept it one tick, you probably got stopped out. But that's the way it goes. But when you saw it turn back down and got a chance to enter right there, uh, when you know you got people trapped off those highs with that single tick, boom, there's your chance. And the best entry was waiting on the second entry here, which comes right here. And it's a great look how it traded high and then closed down here almost on perfect on this low. You put a stop one tick below. There's your signal bar. One tick below and boom, look at that easy move. That was real easy there. And then if you want to be aggressive, you could have bought right here. It's a double bottom. It really looks like a trading range, especially when it bounced there. And let me show you this about congestion. People always say, I tell people stay away from dojis. And most of the time you want to stay away from dojis because unless you understand them, you're going to lose most of the time you buy a doji. And that's why I didn't mark that trade right there, because it's not in a good spot. But it depends on, there are cases where dojis and congestion mean something. When you get to a high like right here where there's a lot of resistance and you start to get a little congestion area, that's not quite as bad. You don't want to enter out of that one, but you did get a failed breakout and then it turned down, but that's not really a good setup. But I guess what the point I'm trying to make is, like, here's a doji right here, but it sets up in a different aspect than it does right here, or even right here. You didn't want to go long out of that congestion there. But dojis are tricky. And if you don't understand them and you're not sure you're reading the price action right, stay away from them. But generally, when they form at extremes, it signals a swing in the other direction. Like, look, it comes down here and it forms a little. Look, it formed one there. It never broke above it, but it broke below. And if you'd have gone short below, you'd have got trapped. But they start forming a lot of times at extremes. Like here's one. See what? It broke higher first, and if you'd have gone long there, you'd have got burned. But it's forming there because it's equilibrium. There's a lot of resistance there, and it's just about an equal amount of buying. I'm just coming back to see what this is doing. To see, there's a little doji setup. That would be a second entry there, and even this was a doji setup, but that's why I tried to get in with a limit order there. So I guess the point I'm trying to make is it depends on where the doji sets up, or where your congestion sets up. If you got a trend line like this right here, and you get a setup there, you just about can't ignore it, except maybe right here. In this case, you've had this huge move up, and then you get an overshoot. If you're reading your channel right, this was really risky going long right there, because look at my little short-term trend. This was the first break of it. So now you got your break, and you're waiting on a setup down here to go long. You got that little channel. Hopefully you can see that. And that was another question that people ask a lot about, is how do you know when you can try to go long? Well, you got to wait on this short-term trend. You finally got a break right there and a retest. And in this case, you got a new low and you got a break of the main channel. So we're probably still going to get a retest of this high, would be my guess. And so that's, now you got the new low. Then, of course, I showed you where I tried to get long there. So you got to be careful where you use dojis and under what context, but they work really well when they're small at the highs and the lows of trading ranges. That's where they work the best, and they're often pretty good at swing extremes. Like if this is a high, a lot of times you'll see a doji there, and then it swings down here, and you'll see a little doji down here, and it swings back up here, and you'll see a doji. So, like here's one. It swung down, you find a doji, and then it goes higher. Swings down, it finds a doji, and then it goes higher. And so you just got to look at the context of where it's happening and how. But most of the time, dojis are, dojis are not a good entry unless, they form at strong support and resistance, and they're small, and they give you a chance to get in close to the support and resistance with a small stop. So I hope that's clear. But let's get back to the trading. This is definitely congestion. That's why, but it's rejection right there off of that. It kept moving down, and you can see it's starting to pick up a lot of buying, and then suddenly all the buyers come in. That's a place, I like that trade because you had the break and two legs down. You didn't quite get a new low. It's aggressive, but it's one of the aggressive ones I like. There was a second entry here, but I didn't like it because it was right at the EMA, all this overlap, and I guarantee you a bunch of shorts got trapped there. And but we just came off the low side of a double bottom, and we just come off the high side of kind of a double, triple top. So the odds are we were probably, when we went higher here, that we were going to test that, and most likely even that one. And that's what happened. Then you get a little correction. And I like this one because, look, you got this big move down. You get this nice reversal bar that breaks above this downtrend line. And you might have even had this drawn more like that. Then you get the break, and then look, it tries to pull back and retest and then goes higher. And that's really a little second entry right there because you got those matching highs. I like that one because you get the break, the retest, and then the second entry long, and boom, there it goes. And then here you go. You're coming down again. You get the break. Look how it pulls back, and then it goes higher. Wait on the second entry. It's right there. And yeah, that's a doji. You know, this is one you probably use a limit order, try to, and you see it would have gotten filled right there at the high of that. Maybe you might have even gotten filled one tick back. I can't remember if this one ticked back enough to fill it right there first, or if it went lower and then broke higher. I can't remember. But a safe play on that would be, you know, a limit order right there at the high. And you might have even skipped this trade, but I liked it because of the trend line rules and the fact that we're trending up. Everything's above the EMA. And so I liked it. And then I like this one, and because it comes right off the trend line again. Now you've got it confirmed. You got the first two swings, you touched it there, and guess what? Now you're touching it again. And again, you might have waited on a break and used a limit order in there and to see if you could get filled, and it would have gotten filled, and then it just takes on off. So I like that. And this is just a trading range. Notice what happened here on this trading range. Prices broke out the top and failed, and that's why you don't go long out the top, especially after a move up, and then it breaks out the bottom, fails out the bottom, and then you get a chance to get on with the trend. I hope that makes sense to you, because that's what you're looking for. That's when you want to enter with a, look at that little doji right across there. It ticked one tick lower. I mean, you can get in right there, even on a stop, and you got 1, 2, 3. Even if you use 2 ticks of stop, you get in. The most you could lose is 4 ticks, and you're getting on with a trend right off the trend line. That's the kind of trade you want to try to get if you can. So I didn't like this entry, again, because we've already moved real high. You've got a bunch of dojis here. It is a second entry long, but it's, you know, there's not much room there. You got this median line that you're coming off of. But I like this one because now you got, notice the new low here. First entry, pull back, second entry, and it bounced right off your median line there. I like that one. And easy scalp. It came right back again. You're starting to get overdone here is what's happening. And you can see we're still trying to go higher and make that retest. It's really kind of flattened out. This is kind of a little trading range here. But notice we had this one. We failed out the top and then failed out the bottom. And even got a second entry there that I tried to get on while we took a break a minute ago, but I couldn't get filled on it. So we talked about the failed second entry, and then guess what? You're working your way back down. You got your little trend line. You get a break right there, closed outside, and it pulls back and tests it, and then goes higher. And look at it go. You get 2 legs up to a new high, and that was trading too off of this shorter term trend line. So you had multiple support reasons there. You got the EMA below you. You got a big reversal bar. You got a new low. You may come down, made this low, then you tried to go lower once and then twice, and really you had a low there. So you got a double bottom with that little 1 tick. Let me make this bigger so you can maybe see that clear. But there's a little double bottom across there. And you get that little 1 tick, comes back and it tests that low again and bounces straight. That's rejection right there. The buyers came back in, the smart traders, and look at it go. Easy scalp, and you could have got a runner off that one. Could have got a runner off this one. I believe even this one got it. No, maybe it didn't. One of these did. Yeah, you would have got a runner there. This is the one you couldn't get a runner. It came back. And if you got in down here, your runners would have still been going. So, you know, you don't know what's going to happen here, but you got to go with the odds that tell you. And, you know, this turned out to would have been a great trade right here. You got a double bottom, a high or low, and you're working higher, and you're looking for a possible retest anyway. It's just been a really strong day. And so this was a great day. Hopefully you understand about you got to get these channels right. You can't just, you know, I just see these people that, you know, and they, you know, they draw a trend line like that. And yeah, it looks valid, but there's no confirmation. That's really your first confirmation. And if you try to go long off that, you're wrong. And guess what? You were wrong about your trend. Where does it fit down here anywhere? It just doesn't fit. And then actually I think that person drew it more like that. Somebody sent me one drawn like that, and you know, it's just touching right there, and maybe they got that off the lows and they drug it up to right there, but that's not where it fits. It fits right there when you drag it up like that, and you can see, and you get a break, and you know, really what you're probably going to do is draw it right off those, and that catches that, comes up, it tries to come back. So, you know, you got to draw these things right. You don't have to have them exact, but you got to be close. You see here, you could have seen it two different ways and still come to the same conclusion. This is the first break, whether, you know, it was the first break right here, and then it's the first break right there, and then you get the two legs down. So no matter whether you saw this little channel or the bigger channel, you still get the exact same, you get to the exact same place. And so you don't have to be perfect, but you got to be close. So that's the only way I know to say it. And generally we don't worry too much about the price action in the day before. There's usually always enough information in today's price action to get to where we want to be. And there was, like I said, there was another trader that was seeing it like this was the downtrend, and then the break and two legs down, and then they were looking for prices to rally out of there. You know, and that looks valid, and you got the two legs going up, but you still had to be aware of this resistance right here and going long at a high after two perfect measured legs up. That's what, you know, that was the part they missed, even if they saw it like that. So, but really when you draw it down off those lows, you used yesterday, you could have even seen it like that, and you drag it to the highs and you still get the same thing, the first break right there and then two legs down. So it just shows you can see this multiple different ways, but you have to it has to be holding prices. The idea is not to draw these lines, you know, I usually get them off the first couple of swings like that right there, or like that right there, and that usually gets me there. But you know, I'm finding out that other people might have to draw theirs a little differently, so we got to rethink this. And the idea is just to make sure you get your lines neatly holding prices. You can see that neatly holding prices up through there, and then you get a break, and you can see this channel's neatly holding prices all the way up. It finds resistance off that top, and it finds support off the low until even right here where it gets the break, it finds support right there, and then finally gets the break. So you gotta get your lines right. You know, and again, there might be multiple ways. You didn't even need the bigger channel if you saw this one going up through right here. And you know, you didn't need the bigger channel if you saw this one going up right here. It still got you to the same place. You still would have gotten this trade right here, and probably this trade here, because usually you get two legs up to a new high. Now you would have had to refigure something here, but then you got the trading range, a little range right here. Let me show you that. I mean, there's, and you can see that little range right there. And you know, it failed out the top, turns down, and look at that little failure out the bottom. You go long right there. So there's another way to enter that trade without having the bigger channel there. And so There's always different ways. If you can find, and look, we'll see it again right here. If you can find multiple ways to enter reasons to enter a trade, that's even better. And you can see that right there. You got this little trading range. You fell out at once. You went to the top. Actually, you fell out at twice and then went higher. And even if you didn't have that, this would have been a little bit more dangerous going long up here. But you can tell that's rejection. You'd need more than one reason to enter that trade right there, because you're having to go long at the very high, you know. But it is coming off the EMA, and that's another thing to look at that I often forget to remind people. Look what happened. Look at this congestion right here. Notice how it's not back to the EMA. The EMA would have been way down here at this time. It's not back to the trend line. It's just out there at a very high spot. It breaks out, it fails. But then you get a little congestion down here, but look where it's at. It's off the EMA. Look at this congestion here. It's off the lows of the EMA. Here's you another one up here that does go higher, but no way you'd want to go. Look, it doesn't go very far. Notice how this one is way above the EMA, and prices have to come back to it. So keep that in mind. If you're real far away from the EMA, that's oftentimes a scary reason to enter a trade, because prices, what creates that EMA is it's just a moving average of the last 21 bars, and that's why it touches it so much, because it's an average of the last 21 bars. And you can just see that, prices are always trying to come back and test that area, and they'll keep testing it until they'll finally get through. And even then, they're usually going to go higher. They're going to try to get through a few times before they usually do. But here's a good reason to think why we might be going to get a reversal here too. First, you overshot the channel. That's clue one. But notice how all the way up, when you got a pullback, they're still making higher highs all the way up. For the most part, you might get a little trap, one tick trap here and there. But for the most part, this high is higher than this one. This high is higher than this high. This high is higher than this one. This high is higher than that one. Now this one you get a little one tick trap, but you got to learn to realize those. Then this high is higher than that one. This high is higher than that one. You just can't get any real correction. This high is higher than that one. This high is higher than that last high. And then finally you get a move where the low is lower than the previous low. It's not higher like it has been. And then you get a lower high, and then you get another lower low. And so and notice how we didn't get any bounce off the EMA. Look what happened every time we came back to the EMA before. It rejected prices. Right here, it took it a few minutes, but it still rejected. Here it rejected. Here it rejected prices. Here it rejected prices. Here it rejected. What happened here? It kind of got on through. That's not a good sign. You got a new high, an overshoot of a channel. You got a new lower low, and then a new lower high. That's not a good sign. That's a sign that you're probably going to get a break of the trend line here. And you don't know when to go long until you get a break of this little down channel and the retest. And it looked like it had retested it right there, but it never broke higher. I tried to get long there. It never broke higher. And so I said, well, we're probably going to go a little bit lower. We're probably going to try to run the stops down here below that little double bottom. And guess what? That's what they've done so far. And now it's still trying to go higher. We could turn down and make another leg down like that, or we could go higher here. You just got to wait and follow the price action. I hate I missed that trade. You wouldn't have got any runners out of this. You can see it would have come back and got my runners either way. But you may get another chance. Now you've got a double bottom, a higher high, higher low, a higher high, higher low. But this EMA is really flat, and there's a lot of overlap in here, and you've really kind of got a channel, so you got to be really careful here. And you can see it may turn into a breakout pullback long there. We kind of broke above those highs right across there, and you can see that there's some nice highs. You might even just go up to the highs where it closed, and you got that one tick trap. So we may come back down here and trap them again. We may stay in this for a while. That may be all the correction we get from all of this. So We're getting to about 35, close to 40 minutes here, but this was all good stuff. But it's been a great trading day. I hope you had a good trading day. I hope you took advantage. Don't, when you see, one thing I want to say, and I say this a lot, when you see a trend where there's lots of little bitty bars that just keep going in one direction, you'll see downtrends just like this. This is an up one. This doesn't look like a strong trend, but trust me, this is a very strong trend, and it doesn't look like it because you see all these dojis, and you're going to get a lot of dojis on a day like this. So if you skip dojis, you're going to miss most of the trades. But then you get a day when it's like this, you got to be real careful with dojis. This is when it's sideways like that, you got to be more careful with dojis. But when it's up, and going, let me see if I can find, here's another uptrend like that. All those little bitty bars, lots of dojis in there. If you don't take the dojis on days like that, you're going to miss some good trades. When it's like this is when you stay away from them dojis. Or if they're happening at a high after a big move up, look at that. You got to wait on the correction, and then if you start getting some dojis, it may mean you're going, you're finding support. So you got to understand about the dojis and the overlap and the congestion. If you're entering in the wrong place, they're horrible setups. If they're in the right place, they're pretty good setups. So keep that in mind. And but for the most part, if you don't understand dojis, just stay away from them. You'll miss some good trades, but you're better off. I always say you're better off to miss a good trade than enter at the wrong spot. And if you're reading the price action right, you don't. The price action doesn't lie. Right here it failed, but there were so many clues. I just showed them all to you. You overshot the channel. Look at that move down. It went right on through the EMA. It didn't bounce off the EMA. It didn't really bounce off the trend channel line. And then it broke higher. You got the little channel coming down. That's the first break. You're usually going to get some kind of retest. I mean, there's plenty of clues to stay out of that trade right there, and any of the rest of them would have worked. And I hope that's clear. And it takes a while to see all this stuff and learn. There's a lot to learn. There's a lot of nuances, and you're going to get fooled a lot. It doesn't mean that you read it right and you just had a failure. Most of the time, if you have a failed trade, you misread it 9 times out of 10. Yeah, good trades fail. Don't take that the wrong way. But I get people that'll send me an email every time they have a failure. They said, I know I read this right. I was confident and it failed. Did I just have bad luck, or did I really read it wrong? Well, 9 times out of 10, I can tell you read it wrong. And the idea is not to figure out. Don't spend your time trying to figure out why you were right here and why this might have failed. Figure out why it failed, why you were wrong, because you were wrong. If you went long here, you were wrong. There were enough clues to know why. Figure out those clues. Don't sit here and try to convince yourself, yeah, I was right, because you're just wasting time convincing yourself you're right, and you never really see what you did wrong. I hope that makes sense to you. So go back at the end of the day, study your trades, figure out what you did wrong, figure out what you did right, do more of the right stuff, and try to learn from the wrong stuff. That's where you get better. You can trade all day here, but if you don't go back and study your work at the end of the day, you're not going to get much better. I promise you, the progress comes from studying your work at the end of the day. So go study your work. I promise you, you'll benefit from it. So I'm going to wrap it up. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.